moving, baby. And boy, do we got some big ones, as both Microsoft and Google reported last night, and they both missed analyst expectations. Guess what? No one cares. Shares in Alphabet, aka Google, if you're nasty, jumped 4% in the aftermarket, while shares in Microsoft took a sharp nosedive and bounced higher.
So what happened here was you had these numbers, Alphabet, Microsoft, both fall short of expectations, right? So but top line, bottom line numbers both look not that great. Big drop in revenue growth for both companies. But what did these companies do? What have we said? What matters this earnings season? Forward guidance. So they came out, they effectively said that our expectations for the next 2 quarters are unchanged. So you get this bounce, and that came for Microsoft after the bell, around 5 o'clock when they had their earnings call. Expectations moving forward. The key thing here is cloud growth. Again, company like Microsoft is trading at 9.8. If they're going to put all their chips across the table on cloud, they should not be trading at 9.8 times sales. They should be trading at 5.6 times sales. So we're looking for a little bit of a pop, a little bit of rally out of these companies over the next 2 days. We'll see what the Fed does, but I think they're going to lead the next leg down heading into August.
How is the tech sector holding up as more FANG stocks report and continue to miss big?
Yeah, we saw everybody get real quiet before these 2 reports, Vaz. People didn't want to step too much into or step too heavily on a NASDAQ 100 call. I saw the options activity there slowing down and puts actually picking up. We've got 2 out of 4 or 5 here that are behind us. And as Garrett just said, it was expectations that set up for a rally. Point out that Microsoft's actually up 3% now. It was up about almost 6% last night after that little bit of a rose-colored glasses outlook. And it was for the year. The quarter, I think they actually went a little weaker for this next quarter. So, you know what? Confusion is going to be the name of the game, I think, if this continues over the next couple of days here. Apple is obviously going to be huge. Amazon, I think, is going to be bigger because you touch up more on inflation there. Apple's going to be more of a high-end consumer type of look, just like American Express. But the cube's holding up right now. The cube's holding up for a day. Don't want to break down too far. You know what? Jerome is in charge of what's going to happen today. Set your earnings aside for the day, and let's watch the circus at 2:30.
Guys, tons of earnings. My Chipotle peeps out there? Yes, CMG reporting. Chubb, Boeing, Bristol Myers, General Dynamics, Hilton, Kraft Heinz, Sharon Williams, Shopify, Spotify, a lot of fies, Texas Instruments, Visa, T-Mobile, Waste Management. Hey, Kenny, good morning. Which ones are you keeping an eye on the most this morning?
We're watching them all, and we're watching none of them. This has been an amazing couple of days already so far, but we'll get into every single one of them, and patience will always pay off. We are in the midst of having the best year of our lives, and the last 2 days have been just phenomenal. We'll get into it a little bit in a little bit.
Today, everyone, we are looking at 64 million. That was yesterday's above average share volume in Shopify stock after the e-commerce name announced layoffs. Garrett, now that the company has released earnings this morning, do you think momentum is set to reverse course after Tuesday's 14% sell-off, or are things going to get worse for Shopify and the rest of the online retail crowd?
I think if you just isolate Shopify, let's just focus on Shopify because every company trades at different valuations. This stock's trading 285 times EV to EBIT. That is not good. That's very, very high. And the price of sales is elevated. Looking at Shopify, yeah, you might get a little bit of a relief rally, but 10% of their workforce, very high valuations. This was a darling of the .com or the COVID bubble. Projected free cash flow, $7.56. Projected tangible book value, $7.37. We're at $35 on this, $31 on this stock. So it's still very overvalued. It still looks like it has some ways to potentially go down to that $20 level if we continue to have a bad negative market. But for right now, 14% cutting the fat. We'll see whether or not the Canadian economy is able to rally back. Remember, they're going to be impacted by the U.S. dollar as well. They're going to be impacted by cross-border relations between the U.S. and Canada. I think you're probably better off just trading Amazon than you are dealing with Shopify.
All right, so Garrett, like an Amazon, a little bit better in this play. I'm stocking Shopify for a volume profile breakdown. I don't see a trade quite yet, but if we do break this this level right here, this 29.50, if we break down, retest, and we do this a lot in Trade the Close. If we break down, retest, this is going to be the area that I would be looking to get short for that potential $20 target, Garrett. So I'm going to be stocking this one in Shopify.